Andrew's with us in Los Angeles. Hi, Andrew. How are you?
Good, Dave. Thank you. How are you?
Better than I deserve. What's up?
So I had a quick question about my car payment. I'm not sure if I should continue paying off my car or if I should just leave it, but I'm kind of embarrassed to admit my car payment is kind of high. It's $3,200 a month.
$3,200 in car payments?
Yeah.
Oh my gosh! What are you driving?
It's a 2017 Toyota Corolla at 300% interest.
So that may or may not have been a real call with Dave Ramsey. Honestly, I don't think he knows I exist, but in all seriousness, we do have to talk about a very real problem in the automotive world: car payments, prices, and repos. This week, I flew to Phoenix, Arizona to meet with Lucky Lopez, who buys and sells cars. So I wanted to ask him a couple questions and figure out what the heck is going on in the car market. So let me take you on this journey with me because I think it's gonna blow you away.
Now, traditionally, I try not to leave the state of Nevada to buy cars, but there's so many repos all across the United States that we're actually getting called in to go and make bids on these cars. So today, I'm glad you came with me, like to Phoenix. We're gonna show you some of the ones that are not on the banks. This is from a title-in store. So unfortunately, this is a very big growing problem. And I'm sure if dealers are watching this, they're probably gonna chime in and say the exact same thing is, you know, the car buying market is not as great as what it used to be. Getting financed is even harder. And I know people are really upset, like, why aren't the prices of cars going down if the demand is not there? And that's something that I can share with you guys after this ambulance drives by.
They're coming to get your repo.
Yeah, exactly. That was somebody that just got 29% interest on their brand new car and had a heart attack, drove away.
For real.
But the main reason why I always get asked, when are the car prices going to go down? When are things going to change and turn around? Unfortunately, the way it works now is that unless you actually have people that are willing to walk away from deals, they're not going to basically lower prices. So dealers right now are over leveraged in their cars. They bought them, 3 to 6 months ago at, let's say, top dollar, and then every month they have reoccurring costs. Their flooring line, which is their credit line, they put maintenance in it, cleaning it up, washing it, and so every month traditionally the book value of cars go down. So dealers are watching the book values go down, but they're still overpricing their cars. They don't want to take them to the auction because they're so afraid that they're going to lose thousands of dollars. It's going to make them look bad. So their only hope is to find some customer dumb enough that's willing to accept overpaying for a car. Now, traditionally, I say this like it's a joke, like, oh, dealers are going to run out of business, but dealers every week are finding people dumb enough that are too lazy. They don't want to look for a good deal or they don't want to negotiate. So they'll go in there and pay way over market value for a car as long as the banks will finance the amount. Now, I know a lot of you guys are going to see the cars that we're looking at and like, wow, that's junk. Why would you buy it? This Toyota Sequoia, people need cheap, affordable cars because when they get their new Dodge Charger repoed at 22% interest, they're going to need something affordable. F-150, great work truck, something like this, we're going to pay probably about $3 to $4 grand. Probably retail for about 6 to 7. Kia Optima, I love buying these things. This one's kind of beat up, but I won't buy it just because it's a hybrid. So if the hybrid system is broken, costs more than the car. Honda Pilots, I'll buy these all day long. Head gaskets is usually what goes bad because of the timing belts. This is about $600 to fix, so I'll buy like $600. The Nissan Kick, these ones are great. Not Nissan Kick, Nissan Rogue. These ones have transmission problems. Chevy Cobalt, cheap cash car, I'll buy this. This is a Buick, God, I can't remember the name of it, but it's basically V6. They have a timing problem. We're gonna buy that one, probably fix it. Another F-150. We got this beautiful GMC Envoy. These things are great, but these are the cars that people laugh that don't think that there's actually loans on, but each one of these things will have some sort of high interest loan on them. So even when you see a junk car driving around and you're like, who would buy this? Who would drive this? I'd be embarrassed. There's somebody out there that's driving a cheap car with an actual high interest loan on it.
Now, throughout this video, what you're looking at is a title loan company's repo lot. What these are companies where people go to borrow money, and here's how it works. You go to these companies and you give them the title to your car. In exchange, they let you borrow some amount of money at some predetermined interest rate, and that rate can be as high as 25% per month or up to 300% APR. Remember, just for context, the stock market returns anywhere between 7 to 9% per year, so 300% is extremely lucrative. Now, if people can't make the interest on their monthly payments, the cars are repossessed and sent to one of these lots. Now there's many lots across the US that exist out there, and this is just one of them. Now Lucky's job is to go to places like this one and buy these cars before they're sent to the auction. This way he can get them at a cheaper price. But the crazy thing is, this data is not reported. This information is not something you can search and find online, and these lots are not open to the public. So this is very much a behind the scenes look. Now so far, the dealers are not lowering their prices even though there's no demand, because they're not willing to take on the losses even though they're already in the red. But eventually, they'll have to start dropping their prices.
Okay, so tell me about this one.
This is a beautiful cream puff that I purchased for $220. Now it's going to cost me about $200 to get it back to Vegas, but the reason why I purchased it is because some cars are actually worth more in parts than they are actually together. So we already have another Infiniti we're going to stick this motor in, but this is a perfect example of how banks now are getting cars like this. As of now, they are no longer going to be lending on older cars. They're going to go 2014 and above. They don't want to mess with anything below.
Okay, so this is like the last time you can buy these older cars and get a loan on them.
Correct, yeah, because now, like I said, as the more defaults they have, they just keep tightening that lending restrictions. So pretty soon, unless you want to get a title loan, it's going to be a newer car with lower miles. Man, I remember when these things came out, I thought they were so cool and so pimp. I wanted one so bad. Thank God I never bought one, because about 5 years after they were made, nothing but junk. You see these in the junkyard. C230 compressors. So this one's a good example of making a decent profit. This is a 2013 Traverse. It's the LTZ, so it's fully loaded. It's got leather, navigation, everything else. I checked the Carfax. Last time reported miles were about 108,000, but this does have a rebuilt title. So most dealers will stay away from this because they don't want to mess with it. Where us, if we're going to do either wholesale or cash, we'll probably make an offer of somewhere around $2,500, and we'll be able to sell it for somewhere around 6,000. But this thing's actually nice, the inside and out, so hopefully we can get this one.
Didn't you make a video recently that there's no cars under like $20,000 or brand new cars that are selling anymore?
Yeah, as of this year, 2024, the next model year, there are going to be no economy cars under $20,000. Everything's going to be $22,000 to $23,000. We're talking base model, crank windows, nothing, just a basic, economy car.
Why is the price so high? Why is it going higher?
Everybody keeps saying it's like the cost of goods and supply chains, but it's BS. It's all corporate greed. They can make a good quality car for right around $12,000 to $15,000. They've been doing it for decades, but for some reason now, they want to blame it on inflation. This is where they're going, and this is kind of the squeeze it's putting on the used car market. So every time somebody complains that used car prices are not going down, that they should be because they see used cars everywhere, it's because those people traditionally would go buy a $15,000 to $20,000 new car or mid-price car, and now, you can't even get the cheapest of the cheapest economy car for under 20 grand. But something's about to break. We can't kick the can any further down the road. We can't blame supply chains. We can't blame inflation. We can't blame pretty much everything. Something has to give. And, us doing videos like this showing how many of the repos there are, and surprisingly, when people think of, like I said, the repo cars, they think of nice cars. When you see some of the cars we're going to look at that have loans and how much money they gave them, it'll blow your mind.
Yeah, a lot of these cars are in really bad condition, especially this one. Why would you want to buy this one?
This one I'm probably going to make an offer about $1,500. The reason I'd buy this is a 2018 Chevy Cruze. It's got about 65,000 miles according to Carfax. And if we look right here, it's selling about 10,000 wholesale, and retail about 15,500. So we're looking at probably putting around maybe $3,000 into the car to get it up to retail condition. So we're looking at a pretty good margin. And most banks don't want to mess with this, because when you look at it, everybody else looks at it, all they see is a nightmare. All I see is actually dollar signs when I look at cars like this. When I hear people on like news, and I've done a few interviews like on Fox and CNN, and they're like, well, I see the numbers, it's bad, but it's not that bad.
Right.
And I'm like, we're having record delinquencies, and this is only a tip of the iceberg. And the worst thing is, a lot of those auto loan portfolios that we talked about in our last video, dealerships and banks bundle these auto loan portfolios and sell them off to hedge funds, retirement companies, or even private individuals for cash flow. And since they're not FDIC regulated, they're not basically forced to input their data. So there are a lot more auto loans out there that are delinquent, that are being repoed, that are not even being reported with these numbers that are getting from like Equifax and the actual government. So there's so many cars that are out here being repoed and that are late that don't even factor into the numbers that the public's even aware about. So this is just one of the many places that we're going to go to that's going to have kind of behind the scene numbers. The reason why banks are having such a hard problem, this car is a 2019. I saw an Uber and Lyft sticker in it, but as you can see in the condition right now, the bank owes way more than probably what the car is worth. So the bank's going to take a massive loss. Also, we have another one over here, which is a Camaro. This thing, the customer didn't have any insurance, so it caught on fire. So unfortunately, the bank has to take the loss for this. And you can see this is a newer Camaro. I think it's a 2018. If you want to take a peek in the inside, it's all completely melted.
You're looking for a V8 here?
Yeah, because even though the car is basically crispy critters, the motor is actually worth quite a bit of money. So I'm hoping that's an actual V8. Oh, I was hoping to buy it if it was a V8, but I think we're still going to buy it because just the 4-cylinder motor alone is worth around $1,800. So I just double checked on LKQ and they're looking at around $1,850 to $2,200. And the last known mileage of this car was 67,000 miles. So I think we may buy it just for parts. Probably going to offer maybe $1,500 for the whole car. Traditionally, like 5 years ago, you never would have seen these cars this beat up and this ugly. But because of the current market and how short we were with cars, people were desperate, clamoring for anything. And so some of these people had to basically go out and take out loans just to afford those ugly beat up cars that we saw.
So we're driving down the street and I saw a lot of the dealer lots empty. Are they going out of business?
Yeah, unfortunately, a lot of the independent dealers are the ones hit hardest when banks start changing their lending programs. So as defaults and delinquencies start rising, banks are always about offsetting their risk. So what they do with this is either give you shorter term for loans, or they give you what's called a bigger bank fee, which is banks actually charge dealers money to buy a loan. And so what's happening now is these independent dealers, if they're trying to sell a $10,000 car and they're going to make a $2,000 profit, and the bank charges you $1,500 to buy the deal, you're only going to make $500. That's not enough to pay your sales guy, pay your overhead. And so that's why you're seeing a lot of these small independent dealers, you know, go out of business and then go away. So when everybody tells me, well, I can see tons of cars at big franchise stores and they're still selling stuff, I keep telling people the first to be hit is not the franchise stores, it's the independents. But as the independents go away, believe it or not, they fund more deals than the franchise stores. So it's like this reciprocal effect of lending tightening up, and it's going to get worse as more, unfortunately, independent dealers go away.
Does it have anything to do with interest rates going up?
Yeah, I mean, a lot of the banks, you know, now that they're taking on this additional risk with interest and also the losses they're taking, they're going to start basically getting tighter with their lending requirements. So they want newer cars with lower miles, with better credit customers to offset their bad portfolio that they lent out during the pandemic. And now, you know, unfortunately, independent dealers are left out to hang and dry because now they have no banks that want to buy their used cars.
Right.
And a lot of Americans, you know, as we go into recession, they don't want to buy a $60,000 car. They want to buy maybe a $10 to $25 to maybe a $30,000 car, and that's what's going to strike the hardest. And that's why I'm saying that this is an actual crisis. It's not something that's small. It's going to affect everybody across the board.
Right. This looks kind of interesting.
Oh yeah, check out this modification. It's definitely interesting.
Ooh, it's bedazzled. Look at that. Who do you think this belonged to?
Probably a stripper.
So ultimately then, what can people do to prepare for whatever's coming, and what can they do to take advantage of it, if anything?
I'd say one of the biggest things is that if you're in a car and you have a high interest rate, try to refinance it now because interest rates are only going to go up. And even if you get a higher percentage point, you want to get something now because as the book value drops in your car, if you owe $30,000 and the car's only worth $25,000, banks will not refinance it. You gotta basically pay that negative equity off. So refinance now, try to lower your payment as much as you can to weather out the storm. If you could sell your car, I'm telling everybody, if you're into it for too deep or you're struggling making the payments, get rid of it now because car prices are dropping. Also, if you're looking at purchasing a car, you need to get pre-qualified because a lot of people come to the banks with or dealerships with illusions of, I'm going to buy this car at this payment, and then when they get there, they find out that the interest rates have almost doubled. Like I said, the term is getting shorter because the cars are older, and not only that, you want to throw in skyrocketing insurance costs because of all the fraud, people crashing their cars because they can't afford them. Insurance rates have skyrocketed, so sometimes your insurance payment can be almost double what your car payment is, which is absolutely insane. My insurance doubled this last year. But what I'm telling everybody right now is just to be patient and wait. do not buy a car unless you absolutely have to. So hopefully if a dealer's telling you this, you'll listen and say, okay, I'm just going to be patient and wait.
Overall, I'd love to hear your personal experiences and stories with buying a car and where you think the car market is headed next. I learned a heck of a lot making this video. I had no idea this world even existed, so I hope you learned something too. If you did, consider hitting that like button and subscribing, and you can find Lucky's channel in the description below this video. You can also grab some free stocks in the description below this video. You can also track them automatically with a spreadsheet linked down below in my Patreon. Love you. Thank you so much for watching this video. I'd love to see you back here on Monday, Friday, sometimes a Wednesday. See you soon. Bye-bye.